In this video, traders, we're going to look at what now after coronavirus. Stay tuned. Hey traders, a very warm welcome to you. All right, so coronavirus whacked the markets, as you can see in the S&P 500 SPY ETF here. You know the score, you've been around. If you've been trading since then, you'll know, hey, we got absolutely hammered and we recovered quite aggressively. And I've been very open and I've said a couple of times in the video on there, I know some of you watching this will be in there, listen, you know, I got wrong-footed. I listened to the narrative too much. I didn't participate early enough in the rally and paid the price for it. And you guys will make mistakes, but that's long gone now. You know, traction back again, put it behind you, undo all the kind of thinking and just go back to pure price. And hey, the last few weeks have just been some of the best trading environments that we've had for a long period of time. And I expect this to continue for a long time moving forward as well. But anyway, you know, we had this coronavirus move lower. And the point is we kind of pushed up here, and this was a little bit of a head game for a lot of people because, you know, we did this, we pushed up, and it looked like for all the world that we were going to push lower. You know, the narrative was awful. The economies were shut. You could see it on the streets. You could hear, you know, lots of things going on. The other side of the coin was the Fed was pumping lots of money, and actually the Fed was the one who won after all this. You know, we had this rally back up, but I think a lot of people were expecting a revisit to lows. That's what I was expecting now. Fortunately, you know, I got away with it with some of the trades that I took, and I shared some of those videos with you guys on the RBS, the Stagecoach. They actually did go to lows, and that's the power actually of picking weak stocks and strong stocks. But that's by the by. I'm not here to kind of redo over these things. I'm here to talk about what could happen now. So I think there's a couple of narratives. One is that, hey, we keep seeing the thought about the second wave of the virus. And this is where we had this little gap down before, and we've, you know, there's a bit of fear starting to creep in. Now, is it a case of, you know, we're going to shrug that off and we're going to carry on marching and people are just going to keep buying stocks and we're going to push up? And if we look at the Qs specifically, the NASDAQ, you know, that's very strong, and that's been, you know, all-time highs. So the stuff out there, like, you know, if you look at the FTSE, very weak in comparison to something like the tech stocks. But let's keep it to SPY for now, because that's broad enough. S&P 500, reasonable large. We're not specifically focused on tech. So a couple of narratives I think might play out here. And again, I want to remind you and remind myself that price rules everything. Guys, when you go and you focus and you nail down exactly what you're looking for, your setups, your strategies, then things fall into place. I cannot tell you how sometimes pressing the reset button and go back to the same things that have worked time and time again for 20 odd years and readjust them and focus them and be very laser focused on what you're looking for, how that can transform. When you try to be too clever, when you try to take too much narrative and listen to too much noise, that starts creeping in. Fortunately, I've been in the game long enough to recognize it early enough, stop, set, pull myself back out of it and go, right, let's get aggressive back on the stuff that's working. And I'll share with you guys, you know, some of the things we talked about on some of those other trades and bits and pieces. And yeah, great to do that, to be able to do that. So if that's happening to you, we're digressing slightly. If that's happening to you, just go back to basics, cut the news off, and just focus on the strategies and setups that are working. However, what can we think about what could happen now? Again, we're not going to predict, we're not going to position based on this, but we're just going to think about where we could go. Now, of course, we could shrug off this second wave, third wave, whatever wave we're on by the time we read this of the virus, and we could march on. Again, price is everything. If we march on, we take out highs again, that's the game to play. It's to look for the strong assets, whether you're trading currencies, whether you're trading stocks, look for the strong stuff and play that move. Wait for the pullbacks, jump on those, look for 2 or 3 day moves, play that game, or intraday, whatever suits you. However, there is a second potential that we have got, and again, we don't want to kind of preempt this. There's plenty of meat on the bone if it does fall. That, hey, let's sell the news type thing. So we've opened the economy, the market's pushed back up. Now, once the economy's open, what else could happen? You know, could it be that it's not as good as we expected? Could it be that even bad numbers, people start to take some profits? Could it be that hedge funds now look towards the latter half of the year and go, you know what, we got away with that. We had a bad Q1. But actually, if this thing holds up a little bit longer and we kind of sit in a range, you know, perhaps we'll liquidate some stuff. And before we go to the range part, this could kind of drop. It could be like a sell the news type thing. You know, the economy damages too much. The Fed starts backing off. and all these things could happen. Oh, well, even if everything stays the same, guys, price can still come back to 260 and still be reasonable. It's not like it's devastation. So, we've got to be open-minded here. We've come a long way. We've had a 1, kind of 2. This is the 3rd pullback. If you look in traditional trends, maybe it's starting to lag a little bit. Maybe it's starting to run out of steam a bit. But the 3rd option, which is probably just as feasible, if not more feasible, is that we kind of sit in a range for a bit. We sit in a range, we digest, we see what happens with the companies, we see what happens with the economy, we see what happens with the virus. No one really wants to sell. No one's really panic selling. FOMO guys are probably in. Maybe we kind of drift up slowly. That's another thing that could happen. But the thing is, if you think about what we need to look out for, we need to look out for what the central banks are doing. Those are the big ones. What the Fed is doing, because at the end of the day, guys, the liquidity that's being pumped in has really, if you're going to look at it objectively and you put your opinions to one side in terms of, hey, the debt and all this kind of stuff, the Fed did what they wanted to do, expected to do, and the UK government as well to a certain degree with the loans and support and the furlough scheme. The government's acted and did what they wanted to do, which was to hopefully stem the economy. Now, there is a little bit of a disconnect between the economy and the stock market, which we've got to remember. So that's the narrative that we've got to be careful of. Despite the fact there's loads of stock companies boarded up in the streets, retail boarded up, there's no traffic on the roads, the stock market is still rallying, but we need to disconnect from that. And so it comes back to, all right, let's look at price. So we think of the narrative in terms of the fundamentals that can change. Let's think of what happens from price levels that can change. Again, if we look at SPY and we stick to SPY, we've got a high to work off here, we've got a low to work off here, but more importantly, and that's short term, and depending on watching this, we may well have breached those. But more importantly, guys, we've got a cluster of not support, and I guess a lot of business that was done around this level. The market was comfortable in this 275 to 295 level, wasn't it? It sat there all throughout all of April and all of May pretty much. And even though we pushed on higher, that was where it was most comfortable. That was almost 50% of the pullback. If you look at the, remember where my fib tool is, that was almost 50% of the move. We go from here to here. It's on black because I used to be on a white thing. Let's just flick it and change it to white so you guys can see it. That will do the job nicely. It was almost 50%, of the pullback. So we pulled back 50%. We kind of sat there and we were relaxed. So, we could roll back and we could kind of sit in this environment. However, for me, I'm still going to play the same game that's been working well, is look for the strong tech stocks to buy, look for the weak stocks that are in trouble to short, and then look for maybe intraday opportunities on some of the futures, on some of the bigger names when we get big significant gaps and drive lowers. I quite like trading those. When we get big heavy down days, I like trading those. Well, that's a go-to trade for me. So I'm just sticking to the bread and butter stuff, guys. I'm not concerned too much about what happens. All I want is some sort of movement in price. I'm kind of disconnected a little bit now, and of course I like to be informed with the news, as we should all be as traders, but ultimately, I know I perform my very, very best when I'm just looking at price. I'm isolating onto a few names. I'm just focused on what's happening. I'm focused on the lows and the highs, the swing levels, the flags, all the stuff that I know works. Is it going to be profitable every time? Of course it's not. But over time, I know that that's the way to do it. So what I'm saying, guys, is think about the narrative in terms of, okay, where could we go? And don't rule out anything. So what are you going to be trading? How are you going to be positioned if we do suddenly rip to highs? How would you be positioned, and what names would you go to if we started ripping to lows? What markets would you start to trade if we stagnated? When would you take a step back from the markets? When would you kind of just take a break and wait for some level? What's your level to get involved in? What's your area to do business? If you start to think of it now, then we avoid over trading, we avoid FOMO, we avoid all the other things, and we can let the market do what it wants to do. And as traders, we can just jump on, trade our setups, trade our strategies, and grab little chunks. And those little chunks will add up over time. All right, guys, take care, keep this managing. I'll see you next one. Bye-bye.